Peter, from where you are sitting on the financing side of the real estate market, you are the man with the money. You provide. You have a lot of these mutual funds that invest in the real estate sector. What are the trends that you are seeing with this increasing interest rate? What's happening right now so that investors can know what to look out for?
Right. The two other guests, they are also, kind of hinted at what's happening in that space. But so the increase in interest rates, just to make everybody be aware, so when the central bank increased interest rates, commercial banks have a decision to make. Do they increase the rates to their clients, or do they suck it up? What we've seen over the last 6 months, most of the commercial banks have increased their interest rates. So an increase in interest rate, what it does, it makes the mortgage a little bit more expensive. Now, the typical buyer has a choice to make. Are they going to still go ahead with the project, or are they going to still go ahead and make the purchase or the investment in the real estate? Or do they wait? What we have seen is that the increase in interest rates to date has not significantly affected the overall demand. On the residential side, people still buying, because on the residential side, right, there is a shortage of houses. So within a particular bucket price point, anything under 26 million is selling like it's going out of style. You need to be on a list. So the depending on the price point, we're still seeing people buying. When they do the calculation, a 1% increase in interest rates, the impact on the payment on a $30 million mortgage, I think it increased the payment by around $20-something a month.
No, $20 a month?
No, 20,000. Sorry.
Oh, 20,000 a month
per month.